Every time you log into a banking app or make a digital purchase, you are generating a massive goldmine of financial information. For decades, traditional financial institutions have treated this deep behavioral history as their own highly exclusive corporate property. They use your transaction history, salary deposits, and spending habits to build invisible profiles and trap you in their ecosystem. If you wanted to take your own data to a different lender, you had to manually download messy password-protected PDF statements. But a quiet technological and regulatory revolution known as open banking is completely tearing down these old corporate walls. This global shift is forcing traditional legacy banks to open secure digital pipes that hand the control back to the consumer. The core concept is deceptively simple, yet it fundamentally alters the entire economic balance of power between institutions and individuals. Through secure application programming interfaces known as APIs, your financial history can now flow instantly wherever you choose to direct it. Instead of banks dictating terms, you can securely link your accounts directly to third-party budgeting tools, automated lenders, and investment platforms. Like and subscribe to the channel visual link if you want to master the changing tech trends transforming your financial future. This evolution has triggered a massive high-stakes global debate about who actually owns and controls your digital financial footprint. Traditional banks argue they spend millions of dollars building the security architecture to house and process your personal transaction data. They believe that while the raw numbers belong to you, the aggregated credit scores and risk profiles are their proprietary intellectual property. On the other side, fintech startups and consumer advocates argue that data is an extension of your personal identity and digital sovereignty. They believe you should have the absolute right to share, revoke, or port your financial history to any provider on the planet. Regulators worldwide are stepping in to settle this dispute by building formal frameworks like the Account Aggregator network here in India. This system completely bypasses dangerous old practices like screen scraping, where third-party apps forced you to share your actual bank passwords. Instead, it uses a dedicated consent layer managed by licensed companies that act as neutral data-blind delivery systems for your files. These aggregators cannot read your financial information because the data packets are completely encrypted end-to-end from bank to recipient. They simply act as secure digital pipes, moving your approved financial data packets from the provider to the consumer platform instantly. This means you can instantly secure a loan or customize a wealth management portfolio without printing a single piece of paper. If you are enjoying these deep breakdowns of modern financial tech, make sure to hit that like button for visual link. The practical implications of this open finance model are completely reshaping how everyday people interact with the concept of money. Imagine an artificial intelligence agent that connects directly to your checking accounts through open banking pipelines to manage your life. The AI scans your raw transaction data, detects hidden subscription leaks, and predicts exactly how much cash you will need next month. Before your money can sit idle, the system automatically routes surplus funds into high-yield accounts to maximize your daily passive interest. When you want to buy a house, you don't spend weeks gathering income documents or begging traditional underwriters for an exception. Instead, you grant a temporary cryptographic consent token that lets the lender analyze your live cash flow profile in 5 seconds. They can instantly see your consistent utility payments, side hustle revenue, and investment habits to approve your mortgage at a custom rate. This creates a hyper-competitive open market where traditional banks must actively compete for your business by offering better consumer terms. If a bank treats you poorly or charges high fees, you can seamlessly shift your entire financial profile to a competitor. However, shifting this massive amount of sensitive data across open networks introduces a brand new set of technological and security risks. Don't forget to subscribe to Visual Link and turn on notifications so you never miss our weekly fintech strategy videos. Cybercriminals are pivoting away from targeting isolated bank accounts to attacking the API connections that link different financial platforms together. If a single third-party personal finance app has weak security protocols, hackers can exploit that link to trace your accounts. Large, centralized honeypots of customer financial data are becoming prime targets for international ransomware syndicates looking for high-value leverage. A single breach at a popular financial aggregator could expose the intimate spending habits of millions of citizens simultaneously. This structural vulnerability forces fintech developers to implement military-grade encryption standards across every single layer of the network. There is also the growing threat of synthetic identity fraud where criminals use leaked data points to build entirely fake profiles. They use open banking channels to open multiple automated lines of credit under fake names and drain funds before systems notice. Advanced machine learning models are now deployed at the gates of these networks to analyze behavior in real time. These artificial intelligence systems can instantly flag anomalies in data transmission speeds that indicate a botnet is pulling financial records. This is why the next phase of open banking relies heavily on decentralized identity models and advanced zero-trust system architectures. Future digital wallets will store your identity and financial history as secure cryptographic keys right on your physical smartphone hardware. When a website asks to verify your income, you don't hand over your actual bank statements or historical balance numbers. Instead, your wallet provides a mathematical proof that verifies you meet the financial threshold without revealing a single private transaction. This specific method, known as zero-knowledge proofs, allows you to clear a credit check without leaking sensitive payroll data. The merchant receives a definitive yes or no answer instead of taking possession of your private financial spreadsheets. You retain the absolute power to grant access for a single check and then immediately revoke that digital token forever. This shifts humanity away from the corporate data monopolies of the past and into an era of true individual data sovereignty. The countries and platforms that master this secure, consent-driven infrastructure will dominate the global digital economy for the next century. Traditional banks that refuse to adapt and continue trying to lock up user data will quietly fade into backward utilities. Meanwhile, agile tech platforms that build open, interoperable financial services will become the new consumer gateways to the global market. We are moving toward a world where your financial data is no longer a passive record stored in a vault. It is an active, programmable asset that you can leverage to automate your wealth, protect your identity, and unlock opportunity. You can essentially program your money to behave intelligently based on real-time market shifts and changes in your personal cash flow. The old boundaries between retail banking, insurance products, and stock market investments are completely dissolving into a single software dashboard. As you navigate your digital banking apps, remember that every transaction is a building block of your valuable financial footprint. Don't let massive institutions lock that value away or use it to limit your options in the open market. Take control of your digital pipes, manage your consent parameters carefully, and use the power of open finance to your advantage. The lines between traditional software development and macroeconomic structure have completely blurred out of existence in our modern digital ecosystem. The ultimate owners of the financial future will be the consumers who understand their rights and master their own data. Turn off the traditional noise, stop relying on outdated banking loops, and start exploring the secure, automated tools available right now. The transformation is inevitable, and it is giving you the keys to your personal balance sheet for the first time. Build your digital defenses, protect your privacy parameters, and claim your rightful place in the decentralized global network. Your financial identity belongs to you, and it is time to make the entire banking system work on your own terms. The journey into the next technological epoch of open wealth has officially cleared the launchpad, so keep pushing your boundaries forward. Stay curious, stay secure, and keep optimizing your personal economic network. So hit that like and subscribe button for visual link.